In the meantime, let's continue our look at retail and the consumer. Lowe's reporting earlier this morning, missing by a penny on the bottom line in adjusted EPS. Sales did beat estimates, however. Let's bring in Brian Nagel. He's analyst at Oppenheimer to break this down. Brian, good to see you this morning. Now, you were kind of
I see you too.
Kind of handicapping something like this, where perhaps Lowe's is going to show some strong year-over-year growth. Maybe though it's kind of in the stock, and also guidance for Lowe's maybe was a slight disappointment. So how are you reading what they reported?
Well, look, Mike, the words you just said when you were discussing Target, like what's next? I think that's what the market's really starting to ask here. If you look at this Lowe's report, it was amazing. Okay, we can, if we want to be nitpicky, we'd say maybe there wasn't as much flow through. They did a 30% comp. Earnings growth was 40%. They did talk about higher expenses, just like Home Depot did yesterday. They're talking about a modest deceleration in sales growth in Q4. But again, it's a great report. But I think the market is saying, what's next? And they're looking towards 2021. They're very much the potential for this coronavirus crisis to abate, and how do consumers shop these home improvement stores over the next several quarters?
And, there's some criticism, I guess, that Lowe's is maybe a step behind the competition, Home Depot, in terms of online and getting exposure to the digital channel. I guess the question is, if you haven't capitalized on this bonanza we've had in home improvement and housing this year, have you missed a little bit of a window? And how does that feed into what you think about the stock?
Well, look, I actually disagree with that. I think Lowe's has done an amazing job here. So if we were talking, we were having this discussion a year ago, that would actually be absolutely be the case. And at that point, Lowe's was really ineffective online. Over the past couple of quarters, under the guidance of the CEO, Marvin Ellison, they've done a phenomenal job of getting online. And we see that again in these numbers today. Look, and there's a very important point here that we all watch. Once again, Lowe's out-comped Home Depot. It's basically 30% versus 25. Mm-hmm. This is now becoming a trend. Lowe's is performing well here. It's just the concern and why these stocks are doing what they're doing. This is very consistent with the downgrade I issued, several weeks ago, is that the market's worried about what comes next and how these companies perform against these very, very difficult comparisons.
And so where does Lowe's shares, for example, get interesting if they continue to back off right here based on what we can surmise about what 2021 is going to look like?
Yeah, so look, I've identified the way, to our clients, I've written, as part of our downgrade, I said, look, I see downside support for Lowe's in the range of 130 to 140. And so looking where the stock's opening today, it's just under 150. So we've got a little ways to go in my view. But at that point, there's a very simple math I get there. That's kind of a trough-ish multiple on what I consider to be cyclically depressed earnings. At that point, I think it's attractive. And then you get the stock to that level, then you're looking towards a normalization in trends, 22, 23, when the company really starts to perform well again.
Shepard Smith here. Thanks for watching CNBC on YouTube.